Thank you for coming on into the live and sharing your essence with me in this eternal moment, of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So Bitcoin got a bit of a retrace as the stock markets tumbled in their continuation of trapping the longs with their positive delta as they tumbled down to the ground. So let's go and take a look at what price action is doing here. Are we coming back to the point of the control in this local range, this Fibonacci level would have you at the pocket region beneath that point of control for a bounce if there was a retrace to be had. We had that nice rejection off the 382, bounce off the 236. So this price action, being trapped in this pitch fan, has been very serving since January. I'm liking it. So let's go into high block capital to see where the liquidity lies. What is high block? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker, and we get to see where those crispy characters are if we're not using a stop loss, where the liquidation points were. So let's do it now. Shout out to everyone here. I was just looking at what I was saying yesterday. I remember drawing a picture of it going down, so I'm trying to insinuate where this hourly was heading us. So that hourly cloud that we had this line up, we're talking about how this hourly is basically possibly going to break us up, but we're saying that hourly curvature is insinuating something, and sure enough we had the cross down event on the 4 hour and the 6 hour. We'll get into that. We're jumping the gun here, but that curvature is what had you at hello. So let's go into the high block, shall we? Alright, so they retraced into the 50x and the 100x down below, took out that few billion imbalance and generated some imbalance to the shorts now.
Fatality.
And now they could clear this pool entirely or start to retrace back up into the 100xers. I think coming back into at least the 100x and fatiguing off in a B wave to continue into the C is the general play we see over and over again. So will we see it this time too? I don't know. Let's go ahead and expand our vision to the higher time frame pools. So pardon me, I'm going to have a fruit shake while we do this. That hit the spot. All right, so gotta switch to max liquidity. So you do have a pool down below in the 26K region, 2468, who do we appreciate? There's about $12 billion that we appreciate down there that they could be grabbing down to the 26K region if they continue $600 down more. And up above, of course, you do have some 7 billion plus, 10, but the overall hot zone on the 7 day is down below at 26, and we're closer there now than above. So do we continue down to that on the run for profit Friday? Could be the case on the liquidity. On the monthly time frame, you're coming down to these pools, 16 billion down here on the monthly time frame to bounce off of. If you bounce off it, do you create a divergence that leads you to the double digits up here at 28K for a continuation idea. There is slightly imbalanced pools up here in the 28K range now that they could come back to grab on the monthly. So we could go down to go up after that. And ultimately, if we go up to that 28.4 region and clear that pool of 35 billion on this 3-month time frame, we could pause out there or drop down to the thicker pools down at 23K. which also are percolating on the 6 month as well. $178 billion down at 24.3. The entire range, 126 billion at 24 even, 100 billion at 23.7, 141 at 23.4. If you look at the 2-year, the 2-year also has that thick band down at 23.6, 253 billion, and not to mention the 165 billion at 24 even that we could come down to. Granted, you have this $600 billion plus pool building up at 32.2, although going down before we go up to that would make more sense to me. And let's go back to the monthly and head into the Binance chart. Alright, so that curvature of the hourly cloud was your clue. Could you hold that cloud? I believe that's what we were saying. And sure enough, just after the live, we did not hold that cloud. What do I mean by this? Well, we got to throw on our oscillators to show ya. And this is why the Momentum Master is pretty clever, and this is what is the link in the description. You can go down to and scroll to the features, toggle everything at your leisure to see what it looks like, or see each component, like the trend cloud where it thins and insinuates reversals. So we had this yesterday as we were going live around here. We were talking about we didn't stay for the candle close, but you would have seen that it closed at that thinning point exactly and never to return. So that was beautiful. That curvature was insinuating this drop here. Do I know the angle that this is going to drop? Could it chop just down to here and you just take profit? You never know how far it will drop. But at that thinning point, that had you at hello, and I said you have to hold this 27K if you expect to be bullish, and we did project up into these regions, but it did not hold the 236. It eventually broke down. These are bearish confluences as well. The bearish trend-based fib over here at 27.84. We said if you can't hold that, you're going to the downside, and sure enough, we did. Shout out if anyone took that. We're going to go ahead and make sure, oh, we didn't turn on the heads up display, there we go. And yeah, if we go to the 12-month time frame, our 12-hour time frame, we're going to start to make our descent now through the time frames. As it stands right now, everything's fractal in nature. You break through the cloud. We talked about this as well. Here's yesterday's stream. We were talking about coming down on the daily time frame. We're talking about coming down to the cloud, see? We had this curvature for you, and we were saying you generally break up and come down and kiss the cloud. If you're looking to continue, that would be a healthier swing zone. And then we also had the Fibonacci for you here. I believe that's the equilibrium of that zone. So coming down to this is still holding true. And yesterday's update zone was kind of on point, I think. And it was really quick. No fluff, no guff, no chicken fluff. I don't know what else to rhyme with that. All right, let's put that back over there. And you're getting the thinning too, so coming down into this reactionary zone. It's also the 236 that we were talking about of this first impulse retrace. 236, we said it needed to hold to go up, and it did. So it went up to that one region of the take profit of this trend-based fib, and we're possibly coming down to that 236 to see if it's still bullish. And pretty much hit that range, so we're going to project out another Fibonacci here, so I'm just going to remove that. And yeah, so you have the 0.5 and the 618 down here with some pools down below. And I think we put a liquidity pool at 25,712. That's just below this 0.65, so that would be, if we raise it up now, that would be closer to 706. So let's see what it does. Let's go down the descending rabbit hole. So the Williams coming up here in a manner, that's what pinned the stochastic RSI, which makes the stochastic RSI not as reliable when it's trending. You need some other volume or momentum indicators to let you know, and the Williams is just that indicator, as is this leading MACD formula, which is normalized within a 0 to 100 framework, which is extremely hard to make. So you could bounce off of this leading MACD. It still has not crossed down completely, although flirting with the idea of crossing back down. When you reach the zero domain, it normally knocks on the door of the zero domain before coming up into the stochastic domain here and could get rejected. So that is the daily time frame. Remember, we talked about the 3-day subtle support. You close a 3-day candle in 32 minutes. So this is going to update some of the stochastic. The money flow is beneath the RSI here. We're going to probably get a rising sun event with that closure. It'll bring up the rising sun. You do have the cross up confirmed. We talked about that as that was closing last Wednesday. And that is the 3-day going down to the 22. 22 had some vector candles and a cross down event of the alarming nature to the Williams, and also coming down to the cloud, which insinuates a continuation at this angle, not tapering just yet. So all of these cross down events, you had a cross down on the 22. Let me just flash that again real quick, of the baselines. The baselines here on the website, baselines are your first sign of reversal. So this baseline is not to be ignored. When these cross down, suppression of price could be inbound. However, somebody was asking me about whether to keep a short open or not. I can't give financial advice like that, but I did say you normally like double top, and so you'd see something like this of some nature before you come down. So getting some sort of like weak B wave before you come down into this region would be more reasonable to think. And coming up into these 100xers at the 26,775 region, 26,775 would have you about, let's just mark it off, 775, 775, that's 772, close enough. $3 won't hurt. And then you could come up to that recovery of some of the vector before continuing down to that region. And that is the 22 alarming cross on the Williams, suggesting you could have a momentum shift. Going to the 12-hour. 12-hour also getting the alarm cross potential with the cross down event for that continuation idea. 12-hour has that little last burst of stochastic to give back within the next 29 minutes when it does update the data on the candle closes. If you go to the 6-hour, the money flow is coming beneath the RSI, suggesting you're winding up for something similar to what we did here. We wound up and pitched it to the upside. So now you're getting this money flow beneath the RSI. Again, the leading MACD formula is kind of breaking below the zero line, suggesting you come back down into the Williams territory. Breaking the cloud as of this moment in time on the 6-hour. If we look at the 6-hour cloud, this tapering idea is also happening here, where you're kind of insinuating this shift potential. Now this changes and undulates the angle back up sometimes, so you start to see this curvature potential to the downside that continues higher. Will we see that with this bearish retest of that cloud? Will it break through and go up even further and become an extended M? I don't know. So that's why at some point you're bouncing off the weighted moving average here. You could see a B wave retrace into some of the liquidity of the 100x shorts that opened up late. Starting to see this cloud taper, the curvature and the insinuation on the 4-hour now. We had the hourly entry model last live there, and watching everything in fractal continuation ideas. You had the bearish divergence on the money flow and the RSI up here as well, lead to the cross down event, which led to the thinning cloud, which led to this downside move. Everything was leading. That's what momentum is about. It leads you to a conclusion before the conclusion knows it wants to be a conclusion. And so you have the 4-hour coming down here with this the Williams alarm making its way down to suppress the price action, and you see the money flow winding up yet again, even more detailed down below the RSI. When this happens like it did here, you had hidden bullish divergence, and boom, they sent it to the upside. That's why I call it the wind up and the pitch. The wind up and the pitch. So the money flow disparity between the RSI and the money flow is something I've noticed is applicable, which is why we overlay them like this. Gray is the money flow, white is the RSI. On the hourly, they're coming back together again. Money flow and the RSI even Steven, coming back up here on the oscillator stochastic and not giving you much with that cross up event. So you essentially went sideways and did not give back any price action. So you went sideways while this went up. So that's slightly bearish in nature in terms of showing a sign of weakness on the probability. What did I just delete? Okay, I deleted that one and then I clicked this, but it didn't highlight. There you go. So you had a rising sun event with the cross up on the hourly that did not go anywhere, just went flat, did not create any momentum at all. Money flow just to break even. Cloud angle here on the hourly is still to the downside. You are starting to taper slightly here, but still mighty thick, insinuating that you can continue even if you do come up to the super trend level at 26,889 on the hourly. Coming down to the 15. So the 15-minute cloud was starting to shift, but it's getting kind of a weakness insinuation here, not really giving this the gold and not reclaiming the cloud. Kind of meandered around the cloud, came back up, and now it could just undulate around because it is a 15-minute cloud. It doesn't always have to give you that immediate reversal idea, but does give you consolidating things. Remember, when the cloud thins, it's weakness or consolidation. So basically it says this is well expressing the first signs of fatigue on all time frames. That's the baseline. So the cloud thins represent weakness or consolidation points. So that this weakness on the 15 is already inbound. So you could just be consolidating and be range bound from this point. Okay. So you previously had 5 time frames oversold, which could have alerted you to your phone about that. And you could have gotten a nice entry off of a level here. This was the equilibrium / sweeping of the low zone here. Okay, and yeah, seeing a bit of a retrace down into the 26,772 region. We went all the way up to the 690. So for the run for profit of Asia, does Asia take it up to a zone and fade off of this adaptive weighted moving average zone here? We'll be watching this area to see. It was very nice to see that cloud come to fruition just after the live. And we'll see what it does up here, if it gets there. If we really get there, do we ever get there? I will see you when we get there. I don't even know what that song is, but it's some oldie but goodie. Alright, so let's close this out. That was decent to see. And, oh, hey, what's up, Nix? If we go to the dollar yen was getting these spikes back up. Thursday was this massive pump up into here, reclaiming everything. We could make a run up into this zone. You had some VIX volatility inbound yesterday. Had a rocket ship that played out quite nicely. If we go to the crypto total, breaking back down against the bearish trend-based fib levels yet again. Do we come to the 786 and below? It's entirely possible. Coming to the Bitcoin dominance at over 50%. The USTD dominance had a previous surge up, kicking people out into their trades. This was when Bitcoin was getting the rocket ship, so they reinvested their money, got knocked out a bit, knocked out again. Basically getting range bound between the support and resistance levels. Back in the idiot box here. Alright, so we're going to see what it does. If it gets to that region, does it fatigue off of some confluence points and create that rejection off the cloud / adaptive / weighted moving average? And yeah, reclaiming this pool up here, $121 million. It's the nearest liquidity pool anyway, so it makes sense to me. And we'll see where it goes. Down to this golden pocket, perhaps. Daily cloud retrace idea from yesterday. And that's all she wrote. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, and all that fun stuff. And we'll catch you at the New York live NASDAQ trading futures later on today for me, but tomorrow for the Westerners. And catch you later. Peace.